my goodness, there's so much I got to get off my chest in this video here today. There's so many things I'm seeing go on, whether it be here on YouTube or just in general in the market right now, that's just kind of like frying my brain. I'm like, why is this happening? Just to start it out here, okay? So I got the chance to watch the video Tom Nash did with obviously Kevin. And I watched that video and it was interesting, right? You know, Tom Nash asked some questions and things like that, like why did he sell out of stocks? Okay, that's all great, right? But then the last like 20 to 30 minutes of that video was quite almost shocking to me, because then they just kind of start, just talking basically. And it's not really like Tom Nash asking Kevin questions. But then basically what Tom Nash goes on to say is that he's thinking about trying to time the market as well. And he's talking about doing it in 6 months from now. And so I'm watching this play out and I'm like, oh my gosh. So Kevin just is trying to time the market. Tom Nash is now talking about trying to time the market in 6 months. He thinks he has 6 months to play with here essentially. And I'm looking at this and I'm like, these are two of the biggest YouTubers out there. One just is trying to time the market and one's talking seriously about timing the market as well. And, if we look at we've always disagreed on stocks, right? Everybody that's on this platform that ever talks about the markets, talks about stocks, we're always going to disagree on stocks. But there's two core things that we almost always agree on, right? One is trading in and out of stocks is usually a bad idea. That's the one thing, right? The second thing is don't time the market. Like that's like the two things we've always been able to agree on as a community here on YouTube, right? And now we're in the situation where folks are trying to time the market out. And I understand like the concept of, don't do what I'm saying essentially. Don't try to time the market. I'm trying to do that, but you don't try to time the market. But the thing is like, I have 3 kids, right? Let's say I was teaching my kids to drive. I'm like, listen, kids, you guys should not speed on the highway. Don't speed on the highway. Don't ever speed, right? But then I take them and I'm going like 140 on the highway, right? They're going to like roll their eyes and like, okay, Dad, yeah, sure. Don't speed on the highway, right? As you do it. And so you can't just say, oh, don't do what I do. At the end of the day, like if you're trying to seriously time the market, like people are going to follow that, right? And they're going to think, well, you can't just say, oh, don't do what I'm doing. If they hear you talking like you're going to time the market, they're going to time the market as well, man. Because they're going to say, well, if you can do it, why can't I do it, right? I know a lot of my people that watch my channel are a lot smarter than I am. And so if I was to, let's say, try to time the market now, again, of course, they're going to say, well, I'm smarter than Jeremy. I can time the market as well, right? And so, and this was interesting on Millennial Money. Even Graham's the last person I would ever expect to time the market. But on an episode a week or two ago, he basically said, he was even thinking about selling out of all his stocks. He said he didn't make the decision. It's very important. He did say that usually every time he's ever had that feeling, it's not only not the time to sell, it's actually the time to buy. But the fact that thought process even went through his mind, that he thought about cashing out of stocks, just kind of blows my mind. And I think it just speaks volumes to where we're at as a community right now on YouTube and just what people are thinking about the markets, right? And I don't know if you guys ever learned about this in, history class or whatever, but, flying a flag upside down, it's, a symbol of, a country being in distress or whatever. And I look at it and I'm looking at the YouTube community right now and I feel like we're a community that's in complete distress right now. Where, the thing we always preach is like, don't try to time the market, right? Buy the dip, right? Buy the dip. And if great companies go down, you buy those stocks, right? And now all of a sudden everybody's trying to time the market, talking about trying to time the market. Oh, I'm going to get out in a few months from now. Oh, I'm already getting out. Things like that. And I can't even watch everything that's going out on YouTube. Like these are just some of the biggest creators on the platform I'm seeing, do this type of activity. What's going on the underbelly of this, right? Because there's like a million people making stock market videos. Are all of them talking about timing the market as well? Like, I think we're just in a complete disarray as an investment community on YouTube right now. It's, it's one of the bigger people on the platform. It's kind of disappointing for me to kind of see this all play out. We used to be a community that was strong like Donkey Kong, and it was buy the dip, and it was think about the long term and all those things. And now all of a sudden it's like, no, get out of stocks, try to get back in 23 or whatever. And it's like, wow, what are we doing here? And I think the reason so many people are starting to think like that is, if we just look at this, we had it pretty easy for a little while there, right? From 2020 into the first part of 2021, the Russell doubled up in price. The NASDAQ basically doubled up in price. Almost all the indexes doubled up in price in a matter of like a year, right? Coming out of the crash and going up. And so it was very easy to make money for about a year, roughly, right? And then all of a sudden, things got tough, right? And ever since then, the Russell's actually been downtrending. And everybody's looking at this now and they're like, man, the market's hard. It's hard to make money. My accounts aren't growing. Maybe my accounts are going down. And so when that happens, people start to think about, man, I'm going to have to do something else. This whole stocks thing isn't quite working out, right? It's not as easy as I thought it was. And all of a sudden, everybody's starting to make these rash decisions on trying to get in and out of the market and things like that because they're not getting anything for it, right? And so you're kind of like start getting in this situation like my accounts aren't growing. It's been 6 months. It's been 12 months, maybe downtrending. Oh, man. I guess stocks aren't the thing or something's going wrong here. And I think this is what leads to this kind of situation. And it's just, it's disappointing in the end because we know that is not the type of stuff you do at the end of the day. By the way, the Russell, it was interesting. I look back over the past 5 years, the Russell's only up like 44% in the past 5 years, which is not very good performance, especially when you take into account how much progress has been made on a lot of those companies that are in the Russell. And when you take into account the massive flood of money out there over the past few years, right? It's extraordinary. Now, look at this, okay? So here's the next thing I want to talk about. So, the chef, in my big account, I'm down $391,000 on that stock, right? I spent a ton of time about the chef. Always thinking about it, focus on it, my thought process, everything like that. Honest, down $125,000 on that stock. These are stocks I've been buying very, very heavily the last several months, and they're just, giving me a beating, right? Planet down $22,000, down 11%. These are all stocks I've been buying very, very heavily the past few months, and spent a lot of time on them, a lot of thought process, right? Meanwhile, there's my dividends account, right? My dividends account is my best performing account now, up 64%. I have no account that has that good of a gain on it right now. There's my best performing account. I spend almost no time worrying about these stocks, thinking about these stocks, right? Like literally no time pretty much in almost all of these. And yet, the chef, honest companies like that, I spend so much time thinking about them. I spend so much time researching the conference calls and the earnings reports and going through them and going back through them and the investor presentations over and over and over again. And, this is a part that can be very, very frustrating for retail investors or investors in general when you're spending so much time, you're putting in so much work and you're losing money. The amount is going down and down and down. And meanwhile, I'm putting in virtually no work toward these stocks, and they're performing amazing. And it's like, this doesn't even account for all the dividends received in these stocks, right? Now look at them. They're all doing tremendous. It's green everywhere. And this is a frustrating part as a retail investor where you're looking at this and you're like, dude, what is going on here? Like, I'm spending so much time. And you got to understand, like, in the short term, especially if you're in growth stocks that are out of favor and they're falling knives, like, you never know when these babies are going to flip, but when they do flip, they flip fast, right? But you have to go through these time periods when it's down and out and you buy the dip and it keeps dipping, and you buy the dip and it keeps dipping, and it's like, oh my gosh, like, is this thing ever going to turn around? Is it going to zero? Are all my stocks going to zero? And that's the thought process. And it can be very, very frustrating as a retail investor to buy the dip and it goes lower, and buy the dip and it goes lower, and buy the dip and it goes lower. And then you might have some stocks that you don't spend any time even thinking about or contemplating, and they're just doing amazing. It's like, seriously? And that's why I always kind of preach, I don't know if you guys see it back here, GVD 123, growth value dividends. Because at the end of the day, if you have some dividend stocks, there's going to be certain time periods when those stocks are beasting or they get really undervalued and there's time to buy. Other times, growth stocks everybody's trying to get in growth stocks sometimes, and essentially there's no good deals in growth stocks. Other times there's great deals. Like right now, it's tremendous deals all over the place for growth stocks. Like the amount of growth stocks I know that I love for the next 5 years that I think are disgustingly undervalued right now. It's like I couldn't even fit all the stocks on the whiteboard probably right now, right? So growth stocks, tremendous opportunity for the next 5 years, in my opinion. Sometimes value stocks are the play. Right now, value stocks aren't the play. But this is why, having different stocks and not just being in one sector is a great opportunity, because you can take advantage of deals all over the place. So this account's maybe a couple years old now. And I acquired a lot of these stocks when dividend stocks were just not the play. And they were trading, significantly undervalued. And stocks like I was getting in December of 2020 into January of 2021, Walgreens, JP Morgan, some of those were very, very undervalued at that time and have done quite well. But you have to just kind of stay focused on the long term with these stocks and don't get frustrated by going down short term on any stocks. Like almost every single great stock ever had significant periods of time for months or even sometimes years where the stock prices were down and out. And ultimately, as long as it's a good company, the fundamentals are growing, the revenue continues to skyrocket, they will make profits and they will make positive net income and the business will turn, okay? Something else I'm seeing in the market that's really frustrating me, right, is because there's such an impatience in the market right now. And we looked at the Russell, it's downtrending the past year plus, right? And people are like getting impatient. Then you got guys like this, right? Guys, I nuked my entire $42,000 account down to $390 on Ford calls. Yes, I feel like complete you know what, but this is my fault alone. I take full responsibility, don't want your pity. And I understand I was gambling. I was wondering, I know the standard advice is to buy an ETF and hold it for 30 years, but I live almost paycheck to paycheck otherwise, and it probably wouldn't contribute to much. It's so pointless to buy $390 worth of QQQ or what have you. The remaining $390 seems pretty pointless to me, and I can easily live without it. So I either can lose the rest of it or stop trading, or I recover, make sensible investments. If this were 10K or whatever left, I'd see it as more sensible. But again, $390 is pointless, right? Would anybody have any good advice, basically? Oh my gosh, okay. This is what you have happen in this sort of market where people start getting really impatient with the market and they're trying to become millionaires tomorrow. And I went through this in 2015 where I had, 200K or so in 2014. My account stopped growing and I started getting really impatient. I just wanted to hit $1 million. And next thing you know, I started doing earnings trades. I went full on in margin, all this stuff because I wanted to climb to $1 million in stocks as fast as possible. You know what ended up happening to me? I lost $75,000 in 2015. And I don't mean $75,000 of went down. I lost that money, okay? $75,000 in losses. And then I had to climb out of that for the next 1 to 2 years. And that's one of those situations that I look back on and I'm like, I can understand where these folks are coming from, but they got to understand like how well they're really doing for themselves and that you're doing amazing. And like just stay with it and stay focused on the long term. By going from $42,000, you know how many people would die to have $42,000 in their stock market portfolio? Like that's a great number. But a lot of people are just like, I want to get to 100,000. I want to get to $500,000. I want to get to $1 million. And they're trying to do it so fast. And next thing you know, they got $390. And then to climb back from $390 to $42,000, that's likely going to take this gentleman, years. And so it's just very, very unfortunate. And I see the amount of put option activity is off the charts right now. People buying puts left and right, hoping the market's going to tank, the shorting of the market, things like that. And the only way you're going to get this market to really, really tank in a massive way is if you get a complete global recession. And outside of that, that's not happening. And so people are basically just putting themselves in these crazy positions where they're going all in calls on a stock for short term, trying to get to $1 million as fast as possible, or they're doing something where they're trying to, short the entire market or load up on put options on the market. And it's like, good luck with that strategy. For 99% of people, that's not going to work, and you end up going to take yourself from a situation where you're doing pretty well for yourself to ultimately not, you're in a bad place. And it's not like going down a stock. It's not like you buy Apple stock and Apple stock has a bad year and it goes down 30%, right? And you're like, dang it, I'm down 30% on the stock. It's not like that at all. This is gone. Like that money's completely gone. There's no getting it back, and that's it. And it's unfortunate, but that's going on in this market right now, right? And we've got there's what I call groupthink in the stock market that's on a higher level than I've ever seen. And when I say higher level, I don't mean it's a more intelligent level. Let me be quite clear about that. But basically what you have happen, Andre posted this in the Discord chat. He's like, why am I getting so many, recommendations for the Big Short recently? Is everybody's in the market, what happens essentially, because we're so much of a big community now, whether you're talking about YouTube, Reddit, social media, everything, right? Such big communities now, the Discord chats and all those sorts of things. We're such big communities where now essentially we're at this time period where, as a society, an investment society, right? Everybody thinks the same exact things at the same exact time. So if everybody getting scared at the same time, they're all going to be clicking on videos that are scary, right? And if everybody's feeling great and euphoric at the same time, everybody's going to feel euphoric. And that's where we're at January of 2021, right? That's where we had a very euphoric market. And then, January 2022, a complete opposite of that, right? Where we're nothing even close to a euphoric, and here in February, same exact thing, right? And every single time the market has a good day, everybody's like, oh, it's probably just going lower anyways. Anytime a stock has a good day, people are like, it's just going to go lower probably next week or next month or on the next earnings. Everything's seen in a negative light right now, right? And that kind of leads to these accelerations in the market that are, I think, much more steep than, people are traditionally used to, because everybody thinks the same exact. And if everybody gets scared and panic sells out of stocks, they all do it at the same exact time, right? And that's just something we have going on. And so that's why, you're going to continue to get a lot of those videos recommended. As long as this market's in a fear-driven place, it's going to be a lot of negativity. And that's just kind of what's going on out there, right? Kathy Wood, I don't know if you guys got to see the latest Kathy Wood video, essentially, of ARK Invest, but she made a great point. She said, people are making big bets against innovation right now. And they're doing that through either selling those stocks at 52-week lows or all-time lows, right? Or they're doing it through straight up shorting. Well, it could be shorting those stocks. It could be shorting the ARK fund, whatever it is, right? And she says it's always a bad idea to bet against innovation, right? And I pretty much agree with her. I think, it was a bet that could be considered to short Kathy Wood stocks in January of 2021, when everything was flying to the sky, and it was like Teladoc was at 300 and Zoom stock was 400 or whatever it was, right? And I think that I can understand people wanting to make those bets. But now we're at this point in time when it comes to this, where it's like, what are you going for now? No, these stocks are at not just 52-week lows, but they've blown through 52-week low after 52-week low. And to bet against innovation is usually a bad idea. It almost always is a very, very bad idea to bet against innovation. And a lot of the companies she owns and other folks own that are in the growth space, don't bet against those companies. You can only make money on betting against those for so long. If it's an innovative company that has a business model that continues to just increase revenues year after year after year, those stocks they always go on some ridiculous rallies. And when I mean ridiculous rallies, I'm not talking about like a 20, 50, 80% rally. I'm talking about a 400% rally. I'm talking about an 800% rally. I've never seen it where a company continually, has revenues go up 10, 20, 30% year in and year out, right? And not see their stock price go up 5x, 10x, 15x over time. And so, I think it's extremely dangerous to be betting against anything that's a super innovative company that is a growth beast. You can get away with that for a certain amount of time in a downtrending market, but as soon as the market flips, those are the first stocks that usually come back the strongest, those in small caps, okay? So I think that's really dangerous. This is really bothering me. Everybody talked about Rona for the longest time, right? Meanwhile, numbers skyrocketed into late December and in January, and I think it ultimately hurt the economy, right? No one really talked about it. It's like, it's just ridiculous in my opinion. And now we're in this situation where numbers are tanking through the floor, which is exactly what I called out and I thought would happen, and I'm happy it's happening. And 7-day average is now down to 300K. At the peak, it was approaching 1 million. It was like 900,000 or so at the peak, 7-day average. So now we're down to 300,000. This should continue to tank down. That will be a good thing for the overall economy. In my opinion, in the back half of December and into January, I think the economy was actually more hurt than the government even realizes, and I think the Fed realizes, and anybody really realizes, but no one really paid attention to it. And I don't think the Fed or anybody really cared because inflation's been so high. They're like, hey, slow the economy a bit. And so I wouldn't be surprised if, some of the economic numbers come out were fairly weak. But I think things will strengthen as we get closer to springtime. And as we get into springtime, I think that's going to be a good thing overall for the economy. That Rona is going down. So that's just frustrating to see no one even talking about it now. And it's just like, whatever, okay. Now, I pulled up this picture. It's funny. I don't always buy the dip, but when I do, it keeps dipping, right? And I want to speak about that for just a moment. By the way, Moomoo, if you want 5 free stocks valued up to $3,500 each from the professional trading platform, it's free to sign up for them. Check out the pinned comment down there, okay? Now, what happened to buy the dip? What happened to it? I mean, seriously, what happened to buy the dip, by the way? A little hack for you there, okay? If you need to see it, pause the video. What happened to buy the dip, in all seriousness? Because there was a moment in this market, right, where it was buy the dip. And if stocks went down, it was buy the dip. And then, it's just been a change in the winds, especially over the past month or two, where it's no longer about buy the dip. It's about sell at any price. And it's very frustrating to see because we know that's the one thing you get screwed over with in the market is to sell stocks at 52-week lows and all-time lows. And what we see right now is we see the most stocks at 52-week lows pretty much we've ever seen. We see stocks left and right at all-time lows. And if there's one thing you ever learn from my videos, okay, is don't sell out of stocks when they're hitting 52-week lows and all-time lows. Those are the times to buy stocks, okay? That is the one thing you always get screwed with, is to sell out of stocks, especially great companies that have, tremendous revenue opportunities for the next, 5-10 years in front of themselves. To sell those stocks at 52-week lows and all-time lows is always a bad decision. And unfortunately, that's what we see happening in this sort of market. And folks banking that we're going to go down another 30-40%. And it doesn't even matter if that happens, right? Even if that happens, those folks are still in the wrong, because you never know when to get back in the market. And that's the hardest thing with this, right? You never know when to get back in the market. You're always going to have things to fear. And to say buy the dip when in an uptrending market, it's very easy, right? Because you get that confirmation within a matter of days or weeks usually, right? It's like buy the dip. And the next thing you know, that stock's higher a few days later, a few weeks later. And so you're getting this constant confirmation of like buy the dip works. The true buy the dip is when you're buying the dip in a downtrending market and stocks are going down, and you're buying that stock and it goes down again. And you're like, oh, great. The stock's even lower now a week later. Oh, the stock's even lower a month later, 3 months later. It's even lower than when I bought it, right? That's a true meaning of buy the dip, is when you're going through those sorts of markets. Buy the dip is not a market that the stocks make new 52-week highs every other day. That's not a true buy the dip. Buy the dip is when the market's actually downtrending and you lower your cost basis again and again and again. Next thing you know, you look back at your lots of the shares you bought over time, and you're in a position where you've lowered your cost basis 5, 10, 15 different times on a stock. That's true buy the dip, okay? And so I think it's important that we get back as an investor community, as a buy the dip community. And however long the market downtrends, whether it just starts going up from here, or whether it continues to go down for the next month or 3 months or 6 months or 12 months, it doesn't really matter. What we know is you buy great companies that have tremendous revenue opportunities for themselves over the next 5-10 years, that have great business models, right, that are exciting and are innovative companies. Those are the ones that will do well. And we know if anything happens in the market, you always know the government's going to do whatever it takes. The Fed's going to do whatever it takes, even if it means skyrocketing debt more. They'll do whatever it takes to get things through so we can grow, because we know what happens if we don't grow. Okay. And nowadays, especially with the baby boomers all retiring, right? Pretty soon here, there's a big need for the stock market to continue to do well over the next, not just coming years, but over the coming decades. It's very, very important. Okay. So, anyways, guys, hope you enjoyed this video. As always, it frustrates me to kind of see everything kind of going on right now, and we just got to get back as a community to focus on the right things, in my opinion. Much love as always, and have a great day.